got off the floor and ran down the hill, so excuse me as I kind of collect my thoughts here just for a second. Waste a little time grabbing for my glasses. As I understood, I've got some. I'm good. Thanks. As I understand, there was an opinion piece that I did that was of some interest to the chamber here, and so I've kind of speechified that a little bit, and I'll just kind of walk through it with you. And did you want questions at the end, or anything like that?
We'll see if the representative.
Oh, okay. He's up on a thing on the hill there. Thank you. You know, on March 20th was the day that the Senate passed the ACEs, the bill that got rid of ACEs. And I listened to a lot of debate that day, that night. And at the end, I proudly voted against ACEs, which is the bill that has, in my opinion, caused much of the decline of Alaska's oil production and has essentially slowed the pipeline to a drizzle. The argument from the left that I listened to was, I thought, disingenuous. On the one hand, there were claims that we don't need this because the companies and the investors, they're going to continue to do this because Alaska is such a profitable place to be. And then on the other hand, they would say that there's really nothing we can do to stem the decline, so we just have to accept decline. It's inevitable. I thought that was fairly disingenuous because when asked the question, well, which is it? Are the companies going to produce here because there's so much oil and it's so profitable, or do we have to accept decline? And of course, there was no answer for that. Later at the press conference that night, hey Les, how you doing? Later at the press conference that night, I made a comment, and the comment was sometimes I think I know too much. And as what I was referring to was that as chairman, co-chair of finance and chairman of the operating budget, it's my job to produce an operating budget for the Senate. I have to deal with information every day that paints the picture for Alaska's economy. And frankly, that picture is pretty grim. What the data shows is that in the not too distant future, we are going to be bean-eaten broke. Our economy is based on the oil that flows through the pipeline, and that oil is becoming anemic, or that flow is becoming quite anemic. Now, to be fair, before ACES was enacted, there was already a decline in Alaska. But ACES has caused the production curve to slope dangerously and rapidly downward. Now, the reason left-leaning politicians like ACES so much is that it is a very effective tool to transfer wealth from the private sector to government. Under ACES, the legislature has spent like Paris Hilton on crack because they've had a lot of money. To be fair, ACES brought money in, no question about it. The investors are going to continue to produce up north, but they're not going to invest in further production because it's just too expensive. They're going to invest in places where it's a little more competitive. Our capital budget, our operating budget, since 2008, ACES was enacted in 2007, our budget has grown by 40%. That's a pretty significant number in any timeline, but certainly over the last 4 or 5 years, it's ridiculous. And the capital budgets have grown dramatically too. The operating budget and the capital budget has grown as well. And capital budgets are good for investing. There's no question that a capital budget is a beneficial thing for the state of Alaska. It's helpful to the economy. It's the private sector that makes up the economy as far as I'm concerned. But government spending is valuable. But too much, the capital budget is used as a re-election tool. And projects are pushed into districts for the purposes of having a ribbon cutting ceremony or putting something in your brochure. And that went crazy since ACES because there was more money. Now, the party is over because investors around the world are seeing what Alaska is doing. And in boardrooms across the planet, talented economists and accountants are recommending that investors invest their money elsewhere because Alaska is in a confiscatory stage right now, and they can make money elsewhere better. It doesn't mean they're playing chicken with us, doesn't mean they're punishing us, they're just doing what they should do to keep their jobs, recommend better investments around the world. And Alaska isn't on that list right now. Texas, North Dakota, Canada, Australia, those are the first world countries where it's fairly safe to invest that have far better terms than Alaska does. But you can go down the list fairly far of taxing regimes, and the countries that are attached to those taxing regimes look pretty bad. I mean, we don't want to be in that company, and yet under ACES we are. Kazakhstan and Indonesia, the Philippines, Egypt, those places all have taxing regimes that you can make the case, and actually our experts lined them all up, that Alaska's taxing regime was less or less competitive than even these third world countries. But the good news for investors is that they don't have to take the risk and invest in some of these scary countries when Australia is open for business, North Dakota is open for business, Canada's open for business. We have more drill rigs in Pennsylvania right now that are operating than there are in Alaska. That's a pretty scary thing. When ACES was enacted, Alaska was producing about 700,000 barrels per day, per year, but now we only produce about 550. A judge said that the pipeline is operational down to about 100,000 barrels per day, but the people who operate it claim that that figure is probably more like about 200,000. But you could even take the judge's recommendation as fact. Regardless, we're in trouble because if we've gone from 700,000 pre-ACES to 550,000 post-ACES, and that's only a 4 or 5 year period of time, you don't have to do much math in your head to figure out we're in big trouble. We're headed for the 200,000 or less productivity. So I think the thing that we need to think of as people who will make policy for the state of Alaska, and those of you who will be in the private sector, who will be benefiting from it and actually creating the Alaskan economy. The world is in an oil boom. We should be in an oil boom, but we're not. The policymakers of places like North Dakota and Louisiana and in Canada, California now is about to pass us, Texas, they have kicked our policymakers' rear ends as far as attractability is concerned. And we either fix our tax system or we suffer the consequences. And the consequences are, in the worst case, we actually disassemble the pipeline, because that's a federal law that you have to disassemble it when it gets so low. Or a best case scenario is just continued decline, and maybe at some point we flatten it out a little bit.
Thank you.
No, I think we'll leave it at that. We've got the representative here. Thank you very much, Senator. Okay, so as I previously mentioned, today our guest speaker is Representative Les Gara with his presentation, Meaningful Oil Tax Reform and How Best to Provide Alaskans with Their Fair Share of Alaska's Oil Wealth. So let me tell you a little bit about the representative. Representative Les Gara was raised in New York and attended Freeport High School. After graduating from Boston University with honors in 1985, he went on to attend Harvard Law School, where he also graduated with honors in 1988. After law school, he came to Alaska, where he served as a law clerk for Justice J. Rabinowitz in the Alaska Supreme Court from 1988 till 1989. Subsequently, he served as an assistant attorney general, where he worked in the Exxon Valdez litigation section from 1989 to 1991. Representative Gara was in public and private Anchorage law practice from 1991 to 2000, including as a partner at Friedman, Rubin, and White. During this time, from approximately 1993 to 2000, he also served on the board of the Alaska Public Interest Research Group. Since coming to the legislature in 2002, the representative has been heavily involved in education, foster care, gas line, and oil issues. He's been married to his wife, Kelly, for 21 years. Please help me welcome Representative Les Gara.
Thank you for the invite. I've got a choice of 2 microphones. I'll use this one, and now I've got to figure out how to use the PowerPoint, which Toby will show me. What we're facing right now is 2 versions of oil tax reform. I think you heard before that people who support ACES as is are, sticking their heads in the sand. I don't know anybody in the Capitol that supports ACES as is. The question is, how do you reform oil tax reform in a way that works? And I'm going to submit to you that the bill that's going through the legislature is a bill that's going to create an Alaska fiscal cliff and take us off of it. There are 2 things you can do in oil tax reform. What the governor has proposed.
Keep talking here.
What the governor has proposed, the largest part of it is roughly a $1 billion giveaway. It says to the biggest oil companies in the world that we have a windfall profits share. It's a tax rate that goes up when oil prices get very, very high and oil companies make a lot of money. And at that point we say we want to share in that. The governor gets rid of that. All of the bills in the legislature get rid of that. That's going to cost us roughly $1 billion, $1.5 billion a year. We give that money to Exxon, Conoco, and BP, and we say you can spend it anywhere in the world you want. That's not what a sovereign does. A sovereign does not hand over a check no more than a corporation would hand over a check and say, spend it wherever you want. Do whatever you want with it. So, we have HB 111. What House Bill 111 does is says you get tax breaks if you increase production, if you increase production in new fields, develop them. We'll give you help if you want to build a processing facility to put oil in the pipeline from a new field. That's been an impediment for new explorers. We'll give you a tax break if you develop the 1.8 billion barrels of heavy oil that are producible on the North Slope. We'll give you a tax break if you do work in the state of Alaska. That's different than the largest part of the governor's proposal, which is here's $1 billion, $1.5 billion a year. You sit down in your boardroom, you decide where to spend it, and where are they going to spend it? They're going to spend it in the places with the biggest pools of oil. And I cannot be a magician and make Alaska have those. Libya has those. Russia has those. There are places around the world that has those. And every corporation that's ever testified before us says, we look at the money we have, we decide where we can make the most money, and we spread it around. That $1.5 billion is leaving Alaska, or most of it is. And that's why we've said you produce here, then you get a tax break. That's the big difference between the 2 bills. In 2006, we had an outdated oil tax system called the ELF. 15 of the 19 fields on the North Slope paid a 0% production tax. That's sort of like what the governor wants to do. You reduce taxes and you think companies will invest here like crazy. We had close to a 0%, actually a 0% by 2006 tax on Kaparik, the 2nd largest field on the continent. On 15 of the 19 fields, 0% tax or near 0% tax. And what did that do? We had a decline rate from 1998 through 2007 when we adopted ACES of roughly 6% a year. From 2004 to 2007, the decline rate on the North Slope with a 0% tax rate on most fields and an invite to new producers that you'd probably get a 0% tax rate, the decline rate was over 8%. Just lowering taxes doesn't work. This is the decline rate that started back in 1988. And that's what happens. The geology is when you find the 2 biggest fields in North America, Prudhoe Bay and Kaparik, they start declining after a couple years. And we've been fighting that since 1988 with different tax laws. By 2006, we had lived in a world of $20 a barrel oil, sometimes $9 a barrel oil. By 2006, before we changed the tax law, oil had risen to over $60 a barrel. But investment wasn't increasing. I mean, those were near record prices at that time, and investment wasn't increasing, with a 0% promise of taxes on any modest-sized field in the state of Alaska. Under the various proposals that we see in the legislature, the top line is the revenue we produce under ACES at about $120 a barrel. Like I've said, we probably lose $1 billion and a half a year in revenue from getting rid of the windfall profit share. From saying we don't want a higher tax rate at high prices when you are reaping near record profits or record profits. So last year, under a bill that was similar, that probably gave away even more money, I asked Exxon, I said, if we pass this bill, will you do new exploration in Alaska? The answer is I can't promise you it lead to increased exploration. I asked BP the same thing, and BP says, no, it's not in our current plan, even if that bill passed. This year, we've asked, will SB 21 change your investment practices, the bill that passed the Senate? And at the time, Scott Jepson of ConocoPhillips said, we're not in a place where we can say how much we would do differently if the bill passed. Thanks for the money. Head of finance for BP, same thing. Don Seckers from ExxonMobil said, you know, Alaska's still not attractive enough under this bill. And in the House, the tax rate's actually even gone a little higher under the version that's been passed in the House. So I wouldn't expect, they may change their testimony because they would be smart to do that, because this is what happens. How do you make money as an oil company? You either produce more oil, which is hard, or you just get a tax break. That's the better way to make more money. And that's what SB 21 does. It gives them an extra $1 to $2 billion without drilling any new oil. It's the greatest plan in the world for an oil company. I expect them to all start testifying that they're going to increase investment because they're going to want the thing to pass. But a few weeks ago, their testimony was, we're really not going to do anything better. Nothing inside the fields that we have, and no new exploration. That's what you get for giving away $1.5 billion. That's not a good idea. How oppressive is ACES right now? Boy, you've heard how oppressive it is. Conoco's earned roughly $2 billion a year in profit in the state of Alaska under ACES. I don't say that it shouldn't be changed. We have a proposal to make it work better that says if you produce, we'll give you modest, good, strong tax breaks. But they haven't been suffering here like you've heard. As a matter of fact, what they tell their shareholders is Alaska produces strong cash margins and very good rates of return. That's not what you just heard from the prior speaker. That's not what you hear from the governor, but that's what they tell their shareholders about that oppressive tax system in the state of Alaska. What did BP tell their shareholders? What we do is we take the money from Alaska and we fuel growth elsewhere. We make so much money here, but you know, the oil fields, the geology doesn't keep us here to do new exploration. We just take the money out. We're in harvest mode. ACES got us the biggest savings account in the nation. We have about $17 billion in savings right now. The surplus has helped us minimize the loss of teachers, but now we're heading into a fourth year loss of teachers because, well, that's been the governor's policy, and people are planning for an oil tax cut of about $1 billion and a half a year. Juneau has lost 100 teachers. Anchorage has lost 400 staff over the last 4 years. Virtually every school district in the state has lost staff. And if you want a state where parents are telling me, and I think you've probably heard it, telling me, I don't know if I want to raise my kid in this state because school funding has gone down per student, because teachers have been laid off in my district, and because I want the best education for my kids, and I don't see a future here if the state's going to give away this kind of money. I don't see education funding ever going up again. If that's what you want, the best and brightest kids to leave the state, then I guess SB 21's okay with you. SB 21, we already are in deficit mode in Alaska. It's going to create an extra $1 billion and a half in deficit. What's that going to do? More teacher layoffs, construction job layoffs, state contracting contractions, law enforcement layoffs. And those are all going to ripple through the private sector. If you think these are just things that are going to happen inside government, well, teachers buy things. Construction workers buy things. These are people who are going to start leaving the state. They're going to have less money to buy things from your businesses. Under ACES, jobs are at an all-time high. And we've heard the argument, yeah, but that's because we're sending a lot of employees up to the North Slope to do maintenance. Well, when the governor was supporting ACES, we got a slide from him saying actually most of those jobs are attributable to drilling, seismic, and other production-related projects. But now they say, oh, those are all just maintenance jobs because the production facilities up on the North Slope are old. There's no evidence to support that. It's contrary to what the governor told us. The facts have changed as his oil tax policy has changed. When the governor took office, he said he spoke to 10 oil companies, and 8 of them said ACES was fine. 2 of them recommended changes. To this date, we can't get him to tell us which 8 told him they were fine. Because I'd like to talk to those companies. Because when they're on the stand, I want to say, look, you said ACES was fine. Now you're complaining that it's oppressive. What's changed over the last 3 years? But the governor won't share with us which of those 8 companies said ACES was just fine. Here is the windfall profit share that the governor wants to get rid of. It's called progressivity. We charge a 25% tax under ACES. Then we say you get $30 of profit above that, and it's still a 25% tax. But then above that, the tax rate starts going up slightly. That's called progressivity. And he said he opposed getting rid of progressivity back in 2010 because companies can take that money and invest it somewhere else. We want this money to stay in Alaskans, not some other country. I mean, he agreed with what we're saying because that's what getting rid of progressivity does. It gives you $1 billion check. It tells you you can spend it anywhere in the world, and the governor agreed with that back then. What's happened under ACES? Well, the largest Spanish oil company, Repsol, has come in here, and they're developing. They've said they're going to spend about $800 million in Alaska over the next few years. They've said that Alaska is a promising area, that it's shown to be oil-rich and carries low exploratory risk. We don't nationalize oil companies in the state. We should get a premium for that. There are companies that nationalize oil companies that charge 90% taxes around the world, and companies invest there. We've had good lease sales over the last few years. There are more companies doing business since ACES than there were at the time ACES was adopted. We've got 69 companies up here doing work as opposed to 18 back in 2007. There's been exploration in the Umiat field, which we believe will produce up to 50,000 barrels a day. Ugric has come online, Nikayachuk has come online, and a number of wells are being drilled this year, last year, and next year. I know I came late because I was supposed to be voting on an education bill and I had to run over here, so I'll rush this a little bit more. If you can take a look at this, investment is an all-time high in Alaska. Companies are doing exploration. We need to do better, but that's what's going on under ACES. We've developed about $15 billion more than we would have under the old ELF law, which was essentially a 0% tax on 15 of the 19 fields on the North Slope. The production decline, you've heard the governor say it's about 6% a year. Conoco has conceded that we're probably at a point where it's about 2.5% to 3% a year. So let's just get that scare tactic off the table. Conoco shares its biggest production with Exxon and BP. Their decline rate of Conoco's rate is going to be about 2.5% to 3% a year, is likely going to be similar. I already told you how ACES works. These are countries who are competing against. You know, people play games. They show you the countries that charge almost no taxes, like Peru, 35%. There's no oil in Peru. I mean, that's why they have a 35% tax rate, because there's basically nothing for people to find. In most of the places below Alaska, the oil finds are not very likely. There are a lot of companies that charge more than we do. Pedro Van Muir says we're slightly high, and we should do something about that, but we're not massively high. You know, a lot of the independents, because we give companies tax breaks if they do exploration. A lot of them have said this is very favorable for us. One independent oil company said a lot of the prospects that are readily drillable are not large enough for the majors to chase, but for us, they're intriguing. That's what Greg Vigil at Savant has said. And that's our future, is smaller oil companies. Because the big oil companies have testified they're not going to do new exploration in the state. Conoco is out at NPRA, but they're doing that under ACES. Exxon is doing Point Thompson. They're doing that because of litigation. But outside of that, we're not going to get major new exploration from the big companies. They've already said that. So we have to do something that attracts small companies here. And then this whole idea of jiggering around taxes. I mean, there are smart things you can do with taxes. But most experts say jiggering around taxes is not what attracts investment to a state. It's the geology. It's the rocks. We've got to start advertising Alaska instead of scaring people away from Alaska. We've heard about North Dakota. You can't stop a boom in another state. Okay? If somebody thinks we could reduce our taxes to zero, do you think that people are going to stop investing in North Dakota? There's a lot of oil there. And that oil is being developed, and we did a legislative research report. We asked our independent legislative research folks, why are people investing in North Dakota? They came up with the technology to get oil out through the fracking process. It wasn't oil tax changes, it was technology. You can't stop technology somewhere, and you can't stop a boom somewhere. So everything you hear about, oh God, people are going to North Dakota, they're gonna go to North Dakota. They're gonna go to Libya. They're gonna go to Iraq. You cannot stop that. What we can do is try and get them to come back here. You know, we have a provision in the law that nobody ever talks about. It says if our taxes are too high, a company can come to us, prove it, and we'll reduce their taxes. That's called the royalty relief law. We get very few applications under that law. That's proof that for most companies, they can't prove that taxes are deterring development. They have lawyers, they have accountants, and they would be here asking for royalty relief if our taxes were too high, because that's what the statute says. If the taxes are too high and they deter a development, we'll give you a tax break. Two companies recently took advantage of that at Ugaruk and at Kayachuk. You would expect a lot more if it was really taxes that was deterring development. So basically, we've got a proposal that says if you spend money in production, we'll reduce your tax rate. And we think that'll work. We now do not have balance in the legislature. We had balance before. I don't want to be partisan, but the Republican majority has blocked this bill from any discussion. It's a smarter way to go ahead. It's what a corporation would do. We give you money, we get something in return. In our bill, we offer a 20% tax credit for new exploration, basically a 20% reduction in your taxes. If it's a new field, we'll give you that for 7 years. Most of the oil in the state is going to be new at some point. If we vastly reduce taxes on new oil like the governor does, he reduces it by about 40%, 40% below the new rate that's already low in the new bill. He says he wants that new tax rate to last forever. At some point, for new production, if you have a tax rate that is really low and you keep it really low forever, the state will never have any money for schools, for roads, for infrastructure, for the things that ripple through the economy. We tell companies that if you produce more than you produced last year, you reverse the decline curve, we'll give you a substantial tax rate on that new tax break on that new oil. And we help companies build processing facilities because that's what you need to do. Small companies often find oil, but then they have to build a processing facility to separate the gas from the water from the oil, and that's often a backbreaker. And so we've said we'll help you finance processing facilities to get that new oil in the pipeline. So basically there are two approaches. I mean, you can say, here's a check. We trust on a hope wing and a prayer you're going to invest all that money in Alaska. Do you really think that's going to happen? I mean, there's no legal obligation that would happen. Do you think Exxon, Conoco, and BP, as good neighbors as they've been, are not going to look and see where they can make the most money with that money? With that money. They're going to spend it mostly somewhere else. They may spend some here. There are just smarter ways to do this. So you've heard the argument, the straw man, which is we want oil tax reform, the other guys want everything to stay the same. I don't know anybody in the Alaska legislature that wants everything to stay the same. So this has been the Democratic proposal, but I'll tell you what. I mean, there have been some Republicans who stood up and said what the governor is doing is wrong too. Bert Stedman, Gary Stevens. I expect Paul Seaton will say that in the House. Unfortunately, in the legislature, it's very hard for people to vote against their leadership. There's almost an agreement inside a caucus that you vote with your leadership. If people don't speak up, we're going to get an oil tax that increases Alaska's deficits by about $1.5 billion a year. You're not going to have teachers to spend in your businesses. You're not going to have construction workers to spend in your businesses. You're not going to have law enforcement officers spend in your businesses. You're not going to have money for your state ferries. This will be Alaska's fiscal cliff. And I do not look forward to what Alaska is going to look like if the bill that's going through the legislature passes. So I'm going to fight it on the Finance Committee. I'm going to try and talk to people and say giving away money with no requirement of anything in return is not something that any sane business would do, and it's not something that a state should do. I tried to make that as quick as possible. Thank you for waiting for me. I've now missed one education vote, and I'll have to pay the price for that. But thank you for welcoming me here. I appreciate it very much. I'm happy to take questions or do whatever you'd like.
Representative Gara, Wayne Stevens.
Hi, Wayne.
Good to see you, sir. Just curious if in all of the calculations that have been done, if anyone has done some analysis of the cost of doing nothing. If we reach impasse on one side or the other, what's the cost of doing absolutely nothing?
Well, oh yeah. Sure. Well, I don't think anybody's proposing doing nothing. So, I've not measured that because there's no proposal to do nothing in the legislature. I suspect that a lot of the development that is going on the North Slope is going to come on. We'll probably have 50,000 barrels from Umiat in a few years. We'll have oil from NPRA, but we should do more. We should add incentives for companies that are willing to invest in Alaska to produce new oil. I don't think anybody's talking about doing nothing.
My name is Mark Wheeler, and my daughter's got 29 students in her class. She's in 3rd grade. Are you saying we can't expect a solution this year for education funding? You don't see that being? What's your prognosis?
Well, we've had 4 years in a row of cuts. I've tried to stop those because I don't think you advance education by putting kids in bigger class sizes. I think laying off teachers, laying off guidance counselors, laying off career counselors is moving education backwards and depriving the next generation of the opportunity they deserve to reach their dreams. But that's what the governor's done. That's what the majority I'm dealing with in the legislature is doing. Just 20 minutes ago, I laid an amendment on the table to put some funding into schools to try and make up for the last 4 years of cuts and to try and prevent next year's cuts. And one of the majority leaders stood up and blocked the amendment and didn't even allow it to come up for a vote. I mean, you guys decide who to elect. It's up to you. It's up to the public. But the folks that we have running things right now are fine with education cuts.
Representative Gara, Ben Brown, good to see you. I
Hello, Ben.
appreciate hearing what you have to say about all this. To go back to what Senator Kelly said about the 40% growth in the operating budget, can you respond to that? Because that does seem, especially if there have been any increases to a worthy area like education.
Right.
I mean, does that not trouble you as well? And is there not some validity to his arguments in that regard?
There's a lot of validity to it. There are a lot of pork projects that were put in a $3 billion capital budget that Republicans on the House side and Democrats and Republicans on the Senate side agreed to. I voted against most of those budgets. I think we should have saved at least $1 billion of those $3 billion spent and put that into savings. Yeah, I was not thrilled with that. I think there were a lot of pork projects in the capital budget. But there's not pork in our schools. You know, teachers aren't pork. And I didn't hear him complaining about how much extra money we put into schools because we didn't. We did back in 2008, 2009, 2010, and starting in 2010, this state has created a school catastrophe. And I didn't hear him say that we're putting too much pork into schools. But I would have spent less money over the last few years, and I voted against a lot of those budgets.
I'm interested in the politics of this. I don't want you to characterize why you think the proponents are supporting this, but what do you think it would take for them to be convinced that this is not a good idea? I guess that's the question.
You know, I know the public said it wasn't a good idea. A lot of people a lot of Republicans started campaigning on the governor's oil tax bill from last year, and they got beat up by the public. The public said, we want something in return for our investment. And so people who started their campaign saying we sort of supported sort of a giveaway that looks like this year's, by the end of the campaign said, I'm going to demand that we get something in return for any tax breaks. They changed their position. But then when they got to the legislature, they changed it again. I do not know how to stop this very sick process of people voting a party line. It's a sick process. I don't know how to stop the sick process of people looking up at the leader of the House or the Senate and going, yeah, I guess I got to vote that way. I mean, I vote for Republican bills. I vote for Democratic bills. I've voted against Democratic bills. You're supposed to vote your conscience. But what you have inside these majority caucuses is a huge amount of pressure for people to vote the party way. I don't know how to change that other than to get the public activated enough that they elect people who they really trust.
So Garrett, could you discuss the gas line bill that passed the House?
Right.
And what can the other regions of the state expect for capital investment in energy?
You know, we have shortchanged rural Alaska in terms of energy. There's going to be very little money for capital projects in rural Alaska if this oil tax bill passes. The gas line bill that passed the other day was this. Under AGIA, no other project is allowed to ship a major amount of gas. They can ship a very small amount of gas. So the big pipeline under AGIA can ship about 12 times as much export gas than the small line that passed the other day. And a small line, you know, the economics of a small line are not good. It's like transporting wood either with a train or with a whole bunch of trips in a Volkswagen, right? And when you transport wood with a whole bunch of trips in a Volkswagen, it just costs more. And so the small line is very likely going to be very expensive, going to produce very expensive gas. And I had a very big problem with it. I mean, I don't mind that going ahead if we can't get the big line going and if there's not enough gas in Cook Inlet. This is sort of plan C. And I would have voted for it because I want all projects to move forward. Hopefully the big line works because that'll get us the cheapest gas and the most revenue so we get some revenue in the state. But the proponents put in sort of a poison pill. Right now, the price of gas, the price of transporting gas through a pipeline, and that's the biggest cost of gas to consumers. That price is regulated by our Consumer Protection Agency, the RCA, and they say you can charge a just and reasonable rate. And that's usually about a 12% profit for a pipeline owner. The sponsors of the bill took that provision out of the law. So parties can agree to whatever transportation rate they want. I thought that was a bad idea. Taking that consumer protection out to ensure that fair prices are being charged to Alaskans instead of the prices that two companies that are probably in a monopoly situation want to charge. I thought that was a terrible idea, and I ended up voting against the bill on that principle right there.
I didn't see on your tax rate, what's the tax rate in North Dakota?
At lower prices, they tax higher than us. At high prices, we tax higher than they do. And you have to count in, North Dakota doesn't have what we have. We own all of the subsurface rights on state land in Alaska. In North Dakota, they also have to pay private property owners a royalty. They have to negotiate a rate with private property owners. But the tax rate in North Dakota, all of these tax rates vary depending on what the price of oil is. And basically below $80 a barrel, they tax more. Above $80 a barrel, we tax more. But you're not going to stop people from investing in North Dakota with a tax rate change. People are going to invest in North Dakota. You know, if I were an oil producer and I had enough assets, I'd invest there. There's a huge amount of oil.
Representative, thank you for being here today.
Thank you.
In reference to North Dakota and Alberta, don't you think that the state of Alaska owes it to its citizens to try to level the playing field? As you've already stated, there's oil there. It's also cheaper to drill there, and much easier access for mid-tier players should come up here and play, it's easy for them to get to Dakota, it's hard for them to get here. Do you think it's the state's responsibility to try to lure them up here by any means necessary?
Absolutely. I mean, the majors have said they're doing no new exploration here. So our future is not with the majors. It's with the mid-size and small-size companies. And that's why we say in our tax bill, we'll help you build a processing facility. We say in our tax bill, we'll give you credits for doing new exploration. We say in our tax bill, if you produce new oil in the state, we'll give you a lower tax rate for 7 years. We say to the majors, if you reverse the decline curve in your fields, we'll give you a tax break. And we say to anybody, if you develop heavy oil in the state, we'll give you a tax break. And we actually lower the taxes at very high prices, because I think Alaska taxes too high at very high prices. So yeah, I think so.
I just want to say something really quick too. First of all, thank you very much for being here today, because we do appreciate hearing your side of this whole thing. But in reality, there's 10 days left for a decision to be made, and we as Alaskans, the majority of us here, I think, we're around when we watch the good times, and we feel like it should happen again. We're watching Edmonton, Alberta. Alberta's population grew 100,000 in 1 year. I mean, obviously, they don't even have enough people to do the service jobs that need to be done to build the houses and feed the people and all that. They're going to take them from us. They're going to take them from Washington, Oregon, and we know that. And you're right. They are entitled to their boom in Canada and in North Dakota. But 10 days. What are we going to do in 10 days to?
Right.
Oh.
Well, you can never stop what's going to happen in Alberta. I mean, they've got a huge oil sands project. They have good geology in Alberta. I believe we have good geology here. Here's the deal. I'll vote for something that works. I'm not voting for something that's going to create a fiscal cliff. I think the bill that this majority is on, you know, when you have one party in control in all three chambers, the House, the Senate, and the governor's office, you tend to not get the most well thought out legislation. And I think that's what we're getting. We're going to get legislation that gives away money and that is not going to lead to major new oil production. There will be claims when new fields come online that's been because of the whatever tax we adopt this year. But if you look back, there are probably going to be fields that were under development already. So I can tell you the current bill is not something I can vote for. A $1 billion provision of it that says you get this money, you don't have to do anything with it, does not work for me, and it's not going to work for this economy.
Right, and I appreciate that and respect that. Just one more thing. So 10 days left, it passes. What's going to happen between the two sides? Are we going to work together and encourage business back into Alaska? What's the plan then?
If this bill passes, it's not going to encourage business back into Alaska. I hate to say it. It's going to cause people to leave. It's going to cause people to lose jobs because there will be a ripple effect. I'm always willing to work across party lines, but we filed a bill that the Republicans said, you're not getting a hearing on it. All right, they did that. I would not do that if I were committee chair. I would not block a bill from getting a hearing. This bill would be in the House Finance Committee starting tomorrow. I'll try and make my points. If folks decide that they want to cut off dissent, if they want to cut off questions, I think that'll be bad for the state of Alaska. There are people inside the building on both sides of the aisle who want a better oil tax bill. The question is whether or not they feel like they can vote against their leadership. That's a bad thing, and I can't change that as a Democrat. I try, but I can't. All I can do as a legislator is vote my conscience, and if my leader told me how to vote, I would tell them to get out of my office. I've actually once had somebody from my party call me and tell me this is the way you want. Somebody in the party wanted me to vote against ACEs because they thought it might give Sarah Palin too much credit, and I just hung up on them. So you have to vote your conscience. You can't let anybody tell you how to vote, and I just wish everybody would do that.